Welcome to the Philly Multifamily Podcast starring your host, Sam Tasheo. To keep up with market events, please hit subscribe.
Welcome to the Philly Multifamily Podcast. I'm here with Art Keagan of Land Services Title Insurance. Welcome.
Thank you.
Thank you for agreeing to come on.
My pleasure.
How are you doing?
Doing okay. Kind of managing the market along with everybody else.
It's an interesting market we're in right now.
Absolutely.
Very transitionary, and we've seen a lot of activity pick up in the last couple of weeks.
Great.
The spring's here, so but enough about what I'm seeing. I want to know what you're seeing. So could you tell us a little bit about yourself and what you do?
Sure. My name's Art Keagan. I'm Senior Vice President at Land Services USA, LLC. I've been with Land Services approximately 19 years, just had an anniversary in the industry for 20. And I've seen a lot of changes in the market through the years. I was the fifth or sixth employee in our company back in 2004, and fast forward, we now have 130 employees. So it was an incredible kind of thing to watch, the growth, go from a regional to a national presence. It was really it's been fun to watch and to be a part of.
So let me ask you this. What's it like being the best connected person in real estate in Philadelphia?
Well, we should find them and ask.
That's why I wanted to have you on, because you've been doing this for a long time, and it seems like you know everyone. So, and you're in a great position where you get to see the finished product of a transaction at the closing table.
Sure. And that's one of the things I regret about what I do. Often you see agreements of sales and it's just property addresses, and you should never take the time to go and see what it looks like before, but you always get to see what it looks like after. So I'm kind of amazed at the whole construction process just because I have no background in it. So
right.
I'm always wowed by the finished product, but I do understand all the hard work that goes into it, and dealing with lenders and dealing with zoning and dealing with even people that own properties on both sides of you. You have to deal with everybody.
Right. It's like a group effort, right? You have lenders,
attorneys,
agents, attorney. Yeah, like everyone kind of collectively tries to get to the closing table, and but the title company is the one who actually conducts it, right?
Correct.
Could you tell us what exactly title insurance is?
Sure. Title insurance is a preventative insurance, whereas life insurance would be covering you for things that happen in the future. Title insurance covers you for things that have happened in the past and making sure that all open items on your policy have been resolved and you have clear and marketable title.
Okay. Can you talk about how title insurance has changed from, I guess, when you first got into the business to now?
I don't know how much it's changed, but I do see it's obviously become more technical.
Mm-hmm.
Also, the whole issue of wire fraud, cyber fraud,
mm-hmm.
if you want to call it, that we didn't have. I mean, we've had it in the past, but now it's just rampant. And now we have encrypted emails and other mechanisms and calling people to confirm wire instructions just to make sure that your money gets to me without going to somebody else.
I feel like COVID also maybe accelerated some remote trends. We have remote closings now.
Absolutely.
Right?
That's a huge change as well. It's not something it's obviously more convenient for people, but it's another layer of risk for us when people are signing documents and they're not in front of us, right?
Right.
And I also missed the opportunity to see clients at settlements and meet people on the other side of the table. Those are missed opportunities when everything's done by the mail.
Sure. I used to go to all my closings pre-COVID, and I rarely go now, but I do like going to them, and I like, seeing you and the title agents and meeting everyone who I've been emailing for the last couple of months. So I do kind of miss that, but the convenience is also really nice. So
yeah, no, absolutely.
Can you talk about what you're seeing in terms of business on your end, in terms of transaction volume,
sure,
stuff like that?
And it's possible that my personal experience is a microcosm, but that would be a little presumptuous. But what I'm hearing is that we're looking at like year over year down 20% on the residential side. We do have do some residential. We're 80% commercial here at Land Services. One of our underwriters, their economic forecast went from a kind of an even flow this year to about a 20% drop, which is pretty significant. That was recently revised.
Right.
I see a reduction in the volume, no doubt about it.
We're seeing that on our end too.
Sure.
So.
I think everybody's going through that.
Yeah. Could you tell us about like a deal story or like a transaction that you're proud of most?
Sure. Anyone that gets through the process without anybody angry, it's an emotional process when you're for everybody. Everybody involved, and especially when there's money involved.
Sure.
There are obviously larger trophy transactions I'm proud to have been a part of, and appreciative to be a part of. But I'm still the guy that gets excited about a $150,000 deal. I ain't not too proud to say that.
I don't know if we're allowed to say this or not. We can cut it out if not. But the Comcast building was done by Land Services.
It was 1 and 2, but those were. I wasn't the business development rep on those, which is why I still drive a Honda.
I think that's by choice, Art. I think you could get something nicer if you wanted.
It's true. I am. I could call myself the Ross Perot with title insurance.
How does like title insurance differ for like Comcast 1 and 2 than like a house?
I mean,
how do you even tackle a transaction like that?
It's a monumental difference. I mean, that's a whole podcast in its own right. Obviously, all of the layers of underwriting and all the different players involved, different types of lenders, different type of lender requirements, whole different list of endorsements. I mean, it is endless how different they are.
It's like you need like a whole team to handle it, right?
Yeah, which we do. I mean, we have several teams here at Land Services. They do a remarkable job and make my life very easy.
It's good. I give you guys a lot of my business as well.
Thank you.
And that's why I keep coming back for more. What advice would you give to someone looking to get into the real estate business or investing?
Absolutely. Well, if you were getting into it as a professional and wanting to work in it as opposed to being an LP, having an LP position, I would say, first of all, get in an office. Mm-hmm. And the collaboration that you have with your colleagues will be incredibly helpful as far as absorbing information about a business you're just getting into.
Yeah.
I know that's not the trend or very popular to some people, but it's tough to learn things on Zoom calls.
Yeah.
And I've been walking up and down the hallways at Land Services for 19 years. I learned something from all my colleagues all the time, just through overhearing people who were asking them a question. And fortunately, they're all very knowledgeable and helpful. But I would say that's the most important thing. Get out there and network. Go to all the events that you can get your hands on. Go to them. Start to create a network, grow your network.
Yeah.
Also, cut your losses. There's people that are basically just sucking energy out of your life, and they're not going to be productive. It's not going to be a productive outcome for you. You have to recognize that and kind of move on.
Right.
Get involved in the organizations, the BIAs, the BIA of Philadelphia, for example. If that's not what the area you're working in, there's other ULI, there's NAOP, SIOR, there's all different types of groups that, sure, it costs you money to get in, and you get what you put into it.
Mm-hmm.
So you have to join, get active, meet people, and kind of work your way through it.
That's good advice. I need to do more of that myself. What do you see for the future of the market?
Well, I would be filthy rich if I knew that.
What's your opinion? It's an open-ended question, so there's no right or wrong answer.
Understood. I'm hoping we see a leveling off of the interest rates. I think we just had our 9th increase.
Yeah, yesterday.
In 1 year.
Record amount.
Amazing. Hopefully that's a trend that's going to stop and then hopefully start to reduce. Mm-hmm. At the end of the day, either way, we're going to eventually settle in a new normal, and our sellers have to understand the new market, and the buyers need to understand the new market.
Yeah.
Takes
time as well.
Sure, absolutely. The sellers are still looking at pricing that they were told 18 months ago.
Yeah. Some of them are still getting it too, in the rare instances.
Sure.
Which
good
is
for them.
Which is not, good for them that they can get it, but it also creates unrealistic expectations.
Sure.
In the marketplace.
And you and I spoke briefly about it last week, but with the potential elimination of the 1031 and the carried interest, mm-hmm. that could create an issue.
Yeah, if that happens, I think volume across the board would go down nationwide. It's one of the main reasons why people are putting their dollars into these structured real estate investments, right, for the tax purposes, not just cash flow and appreciation. So if those two items are removed, a lot of people are not going to put their money in real estate, or even just change jobs, look at other asset classes, mm-hmm. and stuff like that. So that's one of the things that really drives our business and velocity. Like the last 2 quarters, we've done a lot of deals with 1031 buyers where traditional market rate buyers who seek financing are not able to compete or frankly even perform, right? Lending has become very tough. So I hope, we get some relief here, because we've been kind of taking it from every side.
True.
So this last rate hike, they signaled that there would be a potential pause in the future. So hopefully,
yeah,
we get some relief there.
Yeah, I'm no economist, and I don't know what it takes to curtail the inflation. There's people smarter than me out there, and we hope they're doing the right thing. So let's just hope for the best.
Yeah, it's we had the rate hike, and then a bunch of the regional bank stocks took a big beating. So I guess that's all part of the plan. I don't know.
I have, again, outside my purview and pay grade to really discuss the banking industry.
Yeah, me too. But it's interesting times.
Oh, certainly is. It's interesting to say the least.
What do you see for the future of the title insurance business? How do you think it's going to change?
Well, there's always. I've had people come to me and say the blockchain was going to essentially wipe our industry out. That was 4 or 5 years ago. I've heard now we have opinion letters offered by attorneys to act as a replacement to having an actual owner's policy or a loan policy.
Really?
Yeah. And, there's always something, right? There's always something coming down the pike that's going to, we have to deal with, or we don't.
Right.
And it's just talk. Who knows? I mean, there could be something tomorrow that changes our industry forever. Who knows?
Interesting. I've never heard it. What was the attorney letter?
Attorney opinion letter.
Is that, I thought you needed to have title insurance.
Of course you need to have title.
I thought it's in the law. It's legal stat.
It's actually a lender requirement.
Right.
It's not even if you purchase a home with cash, you don't need title insurance. Of course, you should get it for everybody.
Right.
But at the same time, it's not required unless you have a loan policy. They are requiring it.
Right. Interesting. I learned something new today. But you should always have insurance.
Of course.
Always. Do you have any questions for me?
Yeah, what are you saying?
I'm seeing just lending has become extremely difficult, whether it's refinancing or an acquisition. And in some cases, it gets resolved and all is good, but we're seeing more and more cases where construction lenders want out of the project, and developers and sponsors are looking for alternate financing with people that maybe they don't have any ongoing business with.
Right.
And that is converting into more sales opportunities, and which is great for my business. But on the flip side, we have to find someone willing to get a loan or an all-cash buyer or someone in an exchange to buy it, which in the last, I would say, 12 to 24 months was very easy to do, just because super low rates and ease of lending. But today it's, it's sparse out there, the amount of people who want to transact. But
so you're saying that the volume of investors is reduced?
Yes and no. At yesterday's prices, yes.
Well,
but
that's always the case.
Yeah,
Everyone after what happened in 2008, right? That as they always say, there's always more millionaires made in a recession / depression,
right,
than ever. So if you remember, coming out of that, a lot of people were successful in taking advantage of distressed asset situations. And then and it's funny because people since then have some, I've heard them say, I'm on the sidelines waiting for the next downturn.
I've heard it my entire career.
So it's like
6 years.
Meanwhile, all these transactions are going on, and they're just waiting for that golden moment that may or may not ever come.
We're definitely transitioning into a buyer's market. That's for certain.
You think so? Why do you say that?
There is a reduced amount of buyers, right? And then now we're getting more people who need to transact for more like financial pressures are motivating the sale, right?
Okay.
And then there's always, death and taxes and partnership dissolutions. And if you watch the news, which I try not to, there's a recession, forecasted for the next couple of quarters. But if you're looking at selling in the future, it might be in your best interest to do it now than in another 6 months when things could get worse.
Fair
enough. Just in the last month, we've seen a big rise in activity, and that has to do with the cyclical nature of our business. That's not exact, but spring market typically is the busiest. The properties look the best, and then usually we get a rush before people disappear and vaporize to the shore for the summer. So
can't wait.
Yeah. Hopefully I'll be in that boat, but till then, maybe we'll get a couple more transactions done. But yeah, it's been an adjustment, and the last 2 quarters were very slow. So eventually there's got to be pent up demand for people wanting to do stuff.
So you're saying your fourth quarter volume was down?
Fourth quarter was down, and that's, kind of as those majority of those 9 rate hikes were, taking effect, right? And they continued into Q1.
Right.
And now we're looking at a pause, and people are coming out of the woodwork looking for deals.
That's great to hear. It's. I think people are unfair to themselves when they try to compare their performance in a year-over-year comparison, simply because they're two different markets with the interest rates increasing.
Right.
So you just it's got plugged away.
Yeah. What are you seeing on the residential side? Because I don't have a very good periscope into that market.
Well, there's a lot of things there, right? There's housing shortage, and it depends. I mean, if you put up a house in a decent neighborhood, it's gone, right?
Yeah.
Very low inventory, and there's been so much multifamily development in the city, which is great, and really opening up neighborhoods that are now like, places that were dead zones are now thriving with foot traffic and restaurants, and it's actually kind of interesting to have watched it all evolve. Having done this for almost 20 years, and it was Northern Liberties, and then it was Fishtown, and then now it's Kensington, and even that corridor on Spring Garden. I mean, they're just completely transforming neighborhoods, and it's awesome to watch.
Yeah, I heard that from a couple of realtors I talked to, that like someone put like a nice decent list, like a decent house in the suburbs on the market, and they had like 80 showings for it.
Sure. Yeah. It's well, I think that there's a couple things with the low inventory. Unless you're moving or relocating for work, or have to downsize for some reason, how many people want to leave a 3% interest rate to jump into a 6.5 or 6.8% interest rate? That's a huge deterrent to selling a property. That would help make anybody pause, right?
Right.
So that's part of it.
Yeah. If you're growing a family and you're living in like a 1 or 2 bedroom apartment, probably like you're like, I don't care what the interest rate is.
I'm one of 7 kids that shared a bedroom with 2 brothers, so I don't want to hear any kids complain.
It means everyone's soft these days.
I would not say that, but
all right. How can people find you?
I can be found on my cell phone, 856-266-6297, office 215-255-8982. Also take text messages on my cell phone. And finally, my email is akeegan, AKEEGAN, @lsutitle.com. That's Larry, L as in Larry, S as in Sam, U as in Uncle, title.com.
Okay. All right. Well, thank you for coming on the show. It's always a pleasure.
No, my pleasure. And I would also follow that up by saying, even if you have a title-related question, anybody has a title-related question, feel free to reach out, and if we'll get you an answer. We have a lot of very smart people here at Land Services.
I will second that. You always are very helpful, and if I ever need an introduction or something, like, you're always happy to help. So
absolutely.
Yeah.
So that's what the whole business is about.
Yeah. Art, thank you.
Thank you, son. Appreciate it.